Hey guys, welcome back. Okay, so today we're going to be talking more about fair value gap and weak zones. I've gotten lots of questions based on this. I don't know if they are newbies, but some people were asking me about fair value gap. What is fair value gap? How can they identify fair value gap? So I feel like most of you watching this video will understand what fair value gap is, imbalance, inefficiency, however I may call it. While this video is let me say the first aspect of this video is basically for those who don't understand what fair gap is all about. Okay, so I'm going to be talking about fair value gap and I'm going to be talking about weak zones. Now look at this. Fair value gap is a range in price delivery where one side of the market liquidity is offered and typically confirmed with a liquidity void in the same range of price. Price can actually gap to create a literal vacuum of trading, thus boosting an actual price gap. I'm going to explain this in a while. And from just the oral aspect here, you you can understand that it's talking about void left in the market due to liquidity that has been delivered in a particular range. So should there be price, let's say price is seeking for buy side liquidity, and at that point price is like the algorithm is pulling, or the volatility of the market is high and is going in one direction where it fails to refill, and there are gaps. You know what gaps are in the market. I'm going to explain that in a while. And it fails to refill those gaps on its way going, price is likely to come back later to refill those gaps, balance the equation, balance everything about your value. I'm going to show an example about example of this for those who are confused. Okay, so look at the image I've sketched down here. Okay, let me kind of make the color specific so it's to look like we are kind of bearish here. So assuming we are bearish, and price once it's bearish, what bearish means, price is going downwards seeking for sell side liquidity, or it's just going in a very strong volatility. It depends on the time frame. You see multiple candles where there is going to be void, like what we just talked about. Okay, they're going to be void in price delivery. So you can see that this candle forms, this other one forms, and the third one follows by, and price just keeps going downwards. All right, price just keeps going downwards. Maybe from here price left no more void, but that zone where there is void, price is likely to come back to refill it. Okay, I'm going to explain that a bit. Let's look at this first. So we have bearish candles, we have another bearish candle, we have another bearish candle. Normally in your normal candles you're going to see wicks. Like, you know what wicks are, you know what candles are. I explained in one of the videos here on this channel. You can go and watch it. The opening point of a candle and the closing point of a candle. Understanding these candles, especially for daily buyers, okay, there are many things you need to know for these candles. There are many things you need to understand, especially when you are looking for weekly range or daily buyers. There's another thing also called weak liquidities. I kind of dub that's I call it for myself to better understand weak liquidity or weak zone liquidities. I don't know how to put it for you to understand, but I think I'm going to make a video for that, not now. Weak zone liquidities, you better use it, is best in using it to determine your bias, let's say for the week. For the rest of the week, for the rest of the day, what is it you want to see in the market? And once you see that weekly that weak zone liquidity, it becomes more easier. Okay, so talking about fair value gap, this zone left here is what you can call fair value gap or inefficiency or imbalance. Like I told you and I keep saying, I don't argue about the names, whatever I want to call. I can call that to my AY, like my area of interest. You get, it's not, it's also my AY, because that's the area, is an area of interest, sorry, where I want price to come back into. Okay, so it can also be called fair value gap. That's FVG, or imbalance or inefficiency. Inefficient price is not inefficient, but once price should behave like this, close up candles that close up, you can see that's void, there's no void there. So in this case there's no imbalance, everything here is balanced. You see this? But once there's a void there, it becomes a fair value gap, and you're expecting price to take that out. Let's go into the chart. Okay, so based on the simple entry module, I thought, and the optimum trade entry, I even call it, kind of, that's how ICT call it, ICT FVG module, or optimum trade entry, or simple entry module, however I want to make it fit you, the name, whatever I want to make it fit you. Okay, you can call it that. So if from the diagram I displayed previously, you can see there's an imbalance in this zone, and I'm going to try to combine this video with weak zones. Weak zones are very important in trading, especially when you are taking your entries. Weak zones are important when you are taking entries, and weak zones are important when you are talking about sell side liquidity and buy side liquidity. Okay, so that's what I use weak zones for. I recognize them for entries and for liquidities based on bias. So you can see that this delivery of price, where price pushed downward, there are multiple imbalances left, which on the way going price refilled. You can see that from the simple entry module I taught you. You can pause the video and observe what you see here, and observe what you think will likely happen. Okay, I'll give you time. Pause the video. Okay, so I believe you saw that. You had your thoughts on whatever you saw. So you can see, based on the simple entry model, price took out what? Buy side liquidity. You can see these zones, this high. This is depending on what you're looking at. Okay, this is depending on what you're looking at. Like if you are trying to combine this with time, this 15-minute time frame, so time frame for intraday, depends on what you're looking at. But I'm just trying to give you kind of example of how it happens whenever you want to take pick an entry. I promise there's still lots to talk about based on this strategy, based on this my intraday strategy, and I'm just trying to give you this basic concept so you get familiar with them as soon as possible. Because when we start going into the main deal on how to spot liquidities, buyers, weak zones, liquidities, let me see how I'm going to put it. Okay, New York session, and how to look at all these London kill zone, Asian range, and like how to identify trades, how to also trade indecision daily candles. That's kind of another daily cycle on how to pick trades on a candle, like on a daily candle. For you to know, like this is what I use, this is what I do for me to know that this daily candle is going to end up as an indecision candle. You know what I mean by indecision candle? It could be spinning top, it could be doji, whatever doji. Okay, there's what I use by me looking at the charts, using my intraday, my lower time frame, like 5 minute, 15 minute, and also the daily candle, the daily time frame. I will know if the candle is about or is wanting to end as an indecision candle, or likely spinning top, or hammer, or hanging man, or whatever you may call them as. I don't really talk about those names, but you know what I mean by indecision candle, where price opens at a particular area and closes there. Price opens there, rallies up, come back, rallies down, and closes back to the opening. So this is how you pick those kind of trades. I'm going to talk about that later. It's kind of very simple. So let's get back to business. Okay, so before I draw your attention to this, okay, so you see what price did here. This is still another fair value gap. Now see that this is still another fair value gap left here. This price rallies up due to the delivery of price, where it rallies up Forgive me, I kind of paused the video and I was talking. I didn't know where I stopped. So I'm going to start from this. Okay, so looking at this zone, okay, I'm just going to start from here again. Looking at this zone, you can see price took out what? Buy side liquidity. After taking that buy side liquidity, look at your left, another imbalance. There's still imbalance left here at the bottom. You see imbalance left there. You can see there's a C imbalance left here at the bottom, which will not be left like that. Price refuse this first, leaves an optimum trade entry, and this imbalance is the target. Next, this is the target next. So I'm not trying to tell you that you can go back to your chart and do this. I talked a lot. I don't know why I paused the video. I talked a lot. I don't know. I'm going to start from where I stopped, or I don't know where I stopped, but I'm going to start from somewhere. So I was talking about what you saw here, right? So most of you might have guessed it right. The ICT FVG model, the simple entry model, the optimum trade entry, however I want to call it. Price rallies above, leaving this void in liquidity where the algorithm is pulling price, leaving this void for price to refill later. As price rallies, it's left what? Buy side liquidity. If you should look at this, price is rallying. You know that, for when you learn market structure, they always tell you that price does break structure and retrace, break structure and retrace. You get what I'm trying to say? And as it's retracing for an uptrend, it's retracing into what? Discount. For a downtrend, it's retracing into a premium. You get what I mean? So price leaving all these imbalances here, this 50-minute, should trigger that knowledge in you that price is ready to come down here to refill all this imbalance. Okay, so no matter what the time frame is, if you should combine it with time, okay, you should know that price will come back to the trade. Some people don't take these counter trends, okay, they don't take the counter trends, but I do. I scalp counter trends. I take them very well. It just depends on what you're looking at. So before price will come back here, you want to see a confirmation, a kind of confluence that okay, price is ready to come back to make this your target. Price came back into the zone, into this FVG, took out buy side liquidity, left the optimum trade entry. Let me get this right. Let me make this right. Okay. So for some of you that want to take entry here, you can see there's slightly small imbalance here. A small imbalance here. You can see that. For some of you that will not use your hindsight to look into these things, I want to go and take entry. You can see very well that this high is not sweeping any high. This high is not taking out any high. Always understand that. Price took out this high, yes, but did it leave any setup? No. That's what you should be looking at. Not being greedy and so dumbfounded that you want to pick any trades. Pick any trade, okay? Price consolidated, break this low. Of course, it left an imbalance, but does this high sweep any high? No. Where's your buy side liquidity for this at this time? Yeah. Price rallies up. Trust me, if it's in real chart, it will be very difficult for you to look at these things. That's why I do tell people you need to have time for trading. You cannot be trading and be doing something else. You might be a swing trader, yes, but you need to focus on the chart. Know what you're looking at before picking any trade. It's very, very important you have your confluence. You know what you're looking at for picking any trade. If you are doing something else, you're rushing, I don't have time to trade. You're trading with phone, where phone compresses data a lot. I don't like trading with phones. I use my phones to watch trade, but I don't trade with them. Like I don't analyze trades with them. Okay, so I'm very sure many people will pick this place as an entry. Yeah, many people came to my DM, reporting that I saw a simple. That's not the simple entry model. That's not it. You go and do what you don't know and come back to say lots of things about this channel. I'm telling you this. Okay, I'm telling you this beforehand. You pick this place as your entry model or your entry. That's not what I'm teaching. Okay, if for price to sweep out liquidity first, break a certain low, that's my idea. Break that low, cause an FVG. Now the price leave other FVGs. Yes, price did. I see this. Was it rebalanced? Yes. But that's why I like labeling this as my AY. This is my area of interest, not here, not this other FVG here. There's still another FVG here. You can see that all these are hindsight. This is my area of interest. That's the displacement that broke the low, and that's what I'm looking for. That's where I want to pick my trade. Alright, price left an FVG void here. We feel that kept going lower, came back here, left another void. We feel that, and after refilling that, this is kind of what the SMC traders calls in inducement. This is what they call inducement. I promise I'm going to teach about Fibonacci, premium and discounts, PDRA, IST PDRA. So looking at this whole movement, where is our premium? It's a sell, right? It's a sell. So we want to sell at where? Premium. If it's a buy, we want to buy where? At discount. So you expect price to come either the equilibrium, the midpoint is what we call the equilibrium. Right? So I had some people who asked me what's the equilibrium. The midpoint between the premium and discount is what we call the equilibrium. That's the equal. Then you want price to come here, and you can see that all of these other imbalances left here before all this movement or this chopping movement. Because I know some of you want to come and pick your trade here. Let me make it clear. Okay, look at this. Now look at that. So I know of many people who are not using hindsight to say these things, that want to pick their trade here because it's the first FVG and they are scared of missing out. So this is another confluence you want to use, the Fibonacci premium and discount. I'm going to talk about this later, maybe another video, not this video. So you can see that this is what this zone is, what smart money concept calls inducement, a trap. You want price to come into the premium. This FVG as your what? Your area of interest. This FVG as the what? The target. Okay, so all these voids left in the market is what's called what? The imbalance. Price have a reason to come back. Leaving all these voids is giving price a reason to come back to that zone. And I was talking about daily bias. You have this kind of, when I was talking about the weak zone liquidity, there's something I do see maybe at the beginning of the week or during weekends on BTC, especially Bitcoin. When I trade Bitcoin and Euro USD, there's something I do see on Bitcoin. I'm not going to tell anybody that. You can find yourself. It happens mostly on Friday, Saturday. It gives me my bias for the coming week. Okay, it gives my bias for the coming week. Of course, I'll teach you, but not now, not anytime soon. Hopefully, maybe when the channel has a lot of audience. So it gives me my bias for weekly, and it becomes very easier. If you check your weekly chart, your daily chart, and you have a zone marked out, let's say this zone, let's just assume this daily time frame, right? This daily what? Daily time frame. and all these candles are representing this 15 minute, yes, but I say assume this is daily time frame, and all these candles are what representing each day. And you know the market is fractal, so whatever is happening on the higher time frame is happening on the lower time frame too. Everything is just, that's how the algorithm works. To pick this trade, you want price to come what into this FVG. Okay, you want price to come directly into this FVG. Simple. If it's your daily time frame, what are you going to be doing? What are you going to be doing for the rest of that week? Like for the rest of the days, price will take to come into this FVG. That's how you mark out bias. I'm going to talk more about bias. It's just kind of, you know, slight insight. Day one, whatever candle is going to form here, day two, day three, your bias is what? Bullish. Because it's your AI and you are expecting price to come back to that imbalance. So for the rest of that week or those days, before price should come back into this imbalance, if you are shorting, like I mean you're an intraday or a day trader or whatever, if you are shorting at this point, you are doing yourself more harm than good. So you don't need to bring these things together to form your own how I call it, confluence. Day one forms here. What are you expecting to happen in day two? Bullish, 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 till we feel this imbalance. Then you can now start looking for other buyers. Where exactly do you want price to go next? Okay, that's assuming if this is a daily time frame candle. And throughout all those bullish candle, there's what price does where before it pumps, like before price go, that's the power of three, ICT power of three, accumulation, AMD, accumulation, manipulation, and distribution. Price is ready to go up, right? Price is ready to go up. What does it do first? It seeks out sell side liquidity, because price is ready to what? To be bullish, and does what? Boom, pumps up. That's why you see most of all these YouTube videos or YouTube mentors tell you that liquidity is like a fuel to the market. Because once price takes out liquidity, it pulls to the opposite direction. You can see what happened here. Buy side liquidity. Price took it out, immediately rejected, causing that place to be a weak what? A weak zone, and it's pulls to what? To the opposite direction. So for the rest of that day, or for the rest of the days before price should refill this imbalance for your buyers, you are bullish. The same thing for lower time frames. I'm going to teach buyers specifically, and that weak zone liquidity. But now that's knowledge to valuable. But now, and I also promise if the channel should at least get to 300 subscribers before I attempt to make a new video, then that new video will be crypto risk management. Trust me, most of you are doing it wrong. What I mean by taking a trade, the moment you enter a trade, you are doing it wrong. If you don't understand crypto risk management, or let me say position sizing, you are calculating what? You are calculating your position to percentage, you are calculating your leverage, and you are not facing the reality here. Now I don't care what you say, but trust me, you are not facing the reality. You are not doing it right. The analysis might be correct, but your risk management, your money management, is too poor. It's too poor. The moment you enter a trade, all your calculation, everything is wrong. It's rendered useless. I'm going to talk about that probably in the next video if you should get to 300 subscribers. Yeah, and trust me, you'll find out the truth about it, that you've been doing it all wrong. Okay, so what happens here? Price feels this imbalance, and you expect price to do what? To go back up, right? Now look at this trade. I said I'm going to mix up weak zones and imbalance. Okay, so we've talked about imbalance. Imbalance is acting like the AOI here. But what am I don't know about you, what am I looking at? I took this trade last week where some people were like, oh, from the Telegram community I posted, some people DM'd me or some people commented, and why did you take your trade here? Why did you take your trade here? I'm confused. This is not what you're teaching. This is not the imbalance. Yes, it's good to take your trade at this imbalance. There's nothing wrong with you taking your trade at this imbalance, but are you ready to risk all these amounts? Because you taking your trade at this imbalance, your stop loss, according to what I thought in the previous video, your stop loss should be what? Yeah. There's some people that can't risk this amount of stop loss. They want to put their stop loss what? Yeah. Somebody did this today. Somebody did this today, and he DM'd me and showed me like, oh, I was taken out because of this blah blah blah. So you not watch the my latest video on YouTube. See, you have not watched it yet in the church program. I said, okay, fine. When you watch it, you come back to me, okay? Because of this is the week zone. This week. You are putting your stop loss above this week, totally ignoring this important aspect, the most interesting aspect. You are ignoring it. It's funny, right? I'm not interested much about this FVG. That FVG is acting as my AOI, that's my area of interest. Because of that FVG, it's giving me a confluence that I can take trade. But yes, where am I placing my actual entry? Not at the FVG. Not at the FVG. No, I want weak zone. Now I see these weak zones. Any time frame, 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 15 minutes, 1 hour, anytime, they act as kind of what you know as supply and demand. Okay, they act as what you know as supply and demand. Especially weak zones that took out sell side liquidity or buy side liquidity. Okay, not just any kind of weak zone. So you understand what I'm trying to say? Not just any kind of weak zone, because you want to look, there are weak zones everywhere on the chart, but you want to see weak zones that took out sell side or buy side liquidity and correlate with the simple entry module for entries. You know what you know as order block. I'm going to talk about order block. Okay, the ICT explanation of order block. So price took out that sell side liquidity, I immediately rejected. If you go to the lower time frames, that's a supply. What you know as supply. Okay, mainly used to minimize risk, not just kind of concepts like that. It's mainly used to minimize risk. Are you ready to risk all these amounts to take this particular trade? No. I'll rather, instead of placing my entry here, I'll place my entry here. That's weak zones. They are supply. You can go to your chart, study this. It gives you a better risk to reward ratio. Okay, rather than for those people that want to place their entry here, or let me say first instance of the balance. Okay, you are totally ignoring the interesting aspect. Putting your stop loss here, trust me, is too wide. It's too wide. When you know what to do, you don't take trades like that. So I've gotten all the confluence I want. The price I've taken outside liquidity, price I've tapped into an FVG. There's still another FVG at the bottom here where I want price to tap into, and my bias. What is my bias? I already, like, brought all this together, try to correlate them with what I'm looking at. Now I'm not saying you're going to be 100% perfect. No, nobody is, nobody can be 100% perfect. That's where risk management comes in. Okay, knowing how to manage your risk. I have two trades I look for, like 2 times I look for trades in a day. The New York AM session and the New York PM session. That's the 8:30 in the morning opening, or let me say I don't really use the 8:30 because of Forex 7 o'clock in the morning opening. New York 7 o'clock in the morning opening. I start looking for setups, and also 1 o'clock in the afternoon New York session. I don't trade any sessions. I don't need any I don't need to be trading London and New York. Just focus on one particular session, study that particular session. Trust me, you'll be good at it. Now, if I should look for setup in the morning, I don't see any setup. I'll look for another one in the afternoon, New York session afternoon. If I see that setup in the afternoon, be it profit or loss, I'll accept that I'm out of the market for that day, considering 2 factors. If I should see a setup in the morning, that 7 o'clock, sorry, that's 7 o'clock in the morning, if I see a setup there, I've gotten on the confluence I want, I've taken my trade, profit or loss, I'm out of the market for that day. I don't care what you're going to say. I don't care. I don't know how you treat your own psychology, but that's how I treat mine. Okay, so you need to do what favors you. I don't need to take a course on psychology control when I can actually do it myself. Yes, you can be taught a skill, but how to control your own head? Come on, why are you picking a course for that? I don't know how you treat that, but to me, it doesn't just seem right. You can pick a course on a skill, learn a skill, but how to control your own head. You know, the human brain is kind of unique in two ways. The way you think, the way I think, our own insight are different. We cannot expect everybody to deal with every problems equally or the same. So you need to figure out how you approach a certain problem, how you deal with a certain problem. So considering two factors, one is greed and one is euphoria. Yes, that's how I approach mine. Okay, that's how I approach mine. So I'm going to be rounding up this video very soon. Very soon. So if I should take a trade in the morning and it ends up in profit, that excitement, that excitement I get that I've profit, that you can't escape that. You get excited. Not that you show the excitement, but at least deep down in your mind you'll be happy, okay, because you're always happy for good things happening. I don't mean you start jumping up or you start showing it outwardly. I don't do that. I might take a trade that is in profit, I'm just calm, I'll be calm, but inside my head is what I'm having this excitement that something will be telling me, take another trade, you can do this, take another trade. See, is that dumb idea, that dumb voice that I'm not listening to? So I better let my head clear out till the next day. Now, if I should take a loss in the morning, I'm on it after I've seen my trade. I've taken a loss, probably small though because of my risk management, but that's revengeful spirit. That idea of cover up your losses, cover up your loss immediately, cover up your loss. That greed. I treat that by not taking a trade for the rest of that day. Probably the next day, my head is cleared off from any kind of stupid thoughts or whatever. I start looking for fresh trades, profit or loss, and I'm very sure that I'll still make back what I lost the next day. I'll cover the losses plus the additional profit. Okay, so that's how I treat mine. I don't know about you. You can take a loss in a particular day and still cover that loss that same day. But to me, I see it as revenging the market. You want to revenge, and you end up not taking the right decision. So I'm going to end this video soon. Maybe we'll continue later, maybe part 2 of this. So looking at where to place your stop loss. Where are you going to place your stop loss? Where are you going to place your entry? Weak zones. Maybe in the next video, I'm going to talk more about this weak zone because I've spent more time explaining a lot of factors in this video. Okay. Weak zones act as what? Supply. Picking your entry here, putting your stop loss here, you'll probably be taken out because you're ignoring a very interesting part. Those weak zones are always respected on any time frame. Trust me, any time frame, study these weak zones. Yes, you have a very, the entry model where I taught you guys. I not talk about the weak zone. I don't want to compact everything into one video, so it will not seem very confusing. That's why I do this. Okay. So yes, your FVG should be like a call to action, like an AOI, an area of interest where you want price to come into. But where are you actually placing your trade to minimize your loss and maximize your profit, your reward? To minimize your risk and maximize your reward. Where are you actually placing your trade? Don't always ignore these weak zones. I mean, there are weak zones where price ignores, but it depends on the pair. But for Bitcoin, I know very well. I've been studying Bitcoin for months now. I mean, lots of months, almost 7 months, more than 7 months now. I've been trading only Bitcoin, and I understand these aspects. I don't know about any other pair, but go home and study this. Pick your notes, study this weak zones. How does it react? Okay. I think I'm going to end the video here very soon, and we talk about most important aspects. You can see that price is coming to fill this imbalance and some other things. Maybe later in the video. Okay, price filled this one. You can see there's an imbalance here. A price filled. Like I told you, it depends on your bias. Price filled this one, ignore this other one, and that's also in a discount. Depends on your bias. This is kind of a short scalp. I talked about scalping earlier. Price fill this one. If your bias is bullish, you don't want to do this. If you don't know what you're doing, okay, you don't want to do this. If your bias is bullish, if you don't know how to do it, you don't want to do this. This is just kind of a short scalp, picking a trade from your trading here, and it happens on any direction. It could be if you are longing. I'm just trying to figure out, like, take out this aspect, like bring this out to you, pointing it out to you. Okay, so bias is probably the topic of another day So know if your your bias is bullish or bearish. You know where you're looking for. Like I said, price fuels the market. It seeks out liquidity to fuel the market. Takes out stop loss, seeks out stop losses. On sell side liquidity, your bias is bullish. Pick a low, take it out, and boom, it goes up. So this bias for last week was bullish, a little bit bullish, yeah. So this was just a scalp. I don't want to be taking trades for too long or holding them for too long. You get. Okay, so until next time, be safe.